All right, Alejo Pinto, founder of the first VM abstraction framework, Lumio. Thanks for joining us today.
Yeah, thank you for having me. Excited to be here.
All right, well, I'm looking forward to it as well. The way I'd like to tee it up a little bit is, according to Dapp Radar, the decentralized application or Dapp industry is flourishing with an all-time high of 16 million unique active wallets in July of this year. That's a 80% increase over June, which is significant. So today we're sort of going to untap this and go into a deeper dive about the space and what role Lumio plays in this. So first and foremost, I would love to hear a little bit more about your background, what led you down this path that is and can be very exciting for many of us. So tell us a little bit about yourself.
Yeah, definitely. I worked in traditional tech for 4 to 5 years. I was at IBM, worked at the head of growth for IBM Blockchain, which was a small division within the larger IBM, and looked a lot of enterprise applications for blockchain, a lot of permission blockchain space. Proof of concepts, for example, for supply chain tracking or trade finance. And this was around the 2017 to 2018 stage when I think blockchain, crypto, and then blockchain more generally started to become popular. Um, I got into the space actually in like 2014. This was back in college. I discovered Bitcoin and brought it to one of my professors, uh, who essentially said, look, from an engineering perspective, this is very simple. The most interesting part is the game theory behind it. You have these adversarial parties that are coordinating to maintain financial value of something that is literally worth something at that point in time. I think was like $300. Um, so yeah, luckily, made it part of my portfolio and went down the rabbit hole. And from me, what spoke most to me about this is the ability to have a sovereign form of money that can be censored, can be controlled by any one entity, that aligns with the principles, foundational principles of the internet of just having information be available for everyone. I think the internet has been one of the most, if not the most, transcendental technologies that have been invented. I think AI upcoming is probably another one. And crypto is almost like an evolution of the internet, whereas previously we were able to send simple messages. Now we're able to send money. And money is this somewhat abstract metaphysical form of value that we can exchange with each other. And what was missing is being able to make it finite supply and have it sustain value. And that fundamentally is what Bitcoin is. It's a finite supply currency, hard money, 21 million supply. It's programmable, which makes it part of the internet. So you can literally build any applications on top of it where anybody in the world, whether you're in China, Vietnam, South America, the US, you have access to literally money. Like I think I know it's a trip to say, but we take that for granted here in the West, given that we all have bank accounts. But you see that it breaks at the seams, right? Like Robinhood sometimes doesn't let you trade in the overnight markets. Like, why is that? They have to halt trading when there's a lot of volatility. Even during the GameStop saga where the brokerages didn't really know the actual accounting of the stock certificates that they had, so they didn't know whether they could cover, the outstanding stocks. They literally had to halt in one way of the market. You could literally only sell. And if the money was there, if we were all looking at the same spreadsheet, it was all programmable, this wouldn't happen. We wouldn't need to rely on this human intervention. And that's all possible today, relatively. And we can go into that of why some of the infrastructure I think still isn't there. We're still very nascent. I would argue we're no longer in like the 1960s or 70s of the blockchain era. If we're making the comparison, maybe we're in the 1990s where the vision is there, what can be. Amazon started small with books, but I imagine Jeff's original vision was like all of e-commerce. And a lot of those e-commerce sites originally failed because, one, maybe go to market, but two, the infrastructure is still being built out. Not just digitally, but also physically, right? On like the infrastructure to being able to deliver and ship all these items, take all these credit card payments. And, we can go into that and where I think, blockchain and crypto generally needs to be. But yeah, I mean, I think that in the not too distant future, most, if not all of our financial infrastructure will be on blockchains. And if we want it to be, and this is very important, if we want it to be state level actor censorship resistance, which is important from a national security perspective, right? Like if we're putting our stock market and all the backups of the stock market on Ethereum or Bitcoin or Solana or Aptos or whatever, we need to make sure that an adversarial party like Russia or China can just hack it, can just, fudge the numbers or take it down, impact liveness. And, we saw that very recently with CrowdStrike. Literally, our entire airline industry was taken down through a bug. And, our financial systems are even more important than that. So, yeah, I mean, I think that's possible mainly in Bitcoin and Ethereum. And, we can go into details of that. But yeah, happy to be here building infrastructure for this future.
Yeah. No, I totally agree with you. And philosophically, I'm also on the same page as you are. But I mean, over the years, I've seen a lot of things that have happened, even in this world of various blockchains, that where they have gone down as well. And we've seen that with like Solana going down for periods of time. We have now new things. We can get into this a little bit later. Issues potentially with Bitcoin and their network over time, but having some real potential issues that were just sort of thrown out there in the last few months.
Very
But
recently, Ton, for example, the Ton
yes,
was down right
yeah,
after Durov was
as you
arrested.
got, yes, in
Yeah,
France, and that
yeah.
was a significant thing. So there, so this idea that like the old world versus the new world, I think even in the new world we have to be somewhat careful, and I'm still trying to grapple with this myself when I see what's happening. So I can't wait to get into that part. But even going back to what you talked about with IBM, I mean, I was arguing in front of various groups inside at IBM. On behalf of another organization for more permissionless. And they were like, no,
Yeah.
no, no, we got to go with the private world. This is what we're thinking. But I think that has now changed. I'm
Yeah.
just curious, has your perspective seen that the larger organizations are like, you know what, private blockchains may have some use cases, but let's look at the real bigger picture, and it probably doesn't make sense to do that? Or what are you seeing?
Yeah, for sure. I think the best analogy is the intranet versus internet, where there are use cases for an intranet, but it's very hard to coordinate, an intranet of all these, for lack of a better term, adversarial parties, right? Like getting Target and Walmart and, competitors on the same, agreeing to the same rules is very hard. Whereas if you just have a truly neutral platform where like, if you want to play, these are the rules. It's not like we have to argue about what the rules are. That's what the internet is. Then I think it's just a better coordination layer than having to bring in the human element of like, okay, let's bring up what the rules are, what the channels are going to be for communication, how are we going to update certain metrics, who holds the servers, where are they stored, etc. If that's just set by the very simple game theory rules, for example, for Ethereum or Bitcoin, it's literally just where the servers are is where it's profitable for the miners to mine, right?
Yes.
Um, and to land the transaction, even if it's censored, and we saw this for a while in on Ethereum, where through the block proposers and builders OFAC sanction list, transactions are not going through, which you can make the argument like, okay, that's good, but like that means that now this thing that we thought was uncensorable is now censorable.
Right.
um but yeah, like the simple rule is, eventually when someone submits the block, it goes through, even if, a bunch of other validators don't want to push it through. Like that's the rules of the network. And if you want to be in this network, that's just how it works. So yeah, I mean, I think generally people come around when they see that there's no other option, and everyone else is joining this thing, and then the network effects of it getting bigger. That, like, imagine if you were a company and you were still you were like stuck to the intranet mentality, you were still on AOL today instead of having like a website, right? That would, or having digital commerce. Yeah, I mean, I think once there's a tipping point in the network effects of something that gets widely adopted, it's hard to fight against it.
No, I totally agree with you on that one. All right, let's talk a little about Lumio and what you guys are working on, what you're building out. I'd love to hear a little bit more about that.
Yeah, so very simply, all these blockchains cause vendor lock-in because you're only able to build in one language for one virtual machine, which is kind of like an operating system for each blockchain. So Ethereum has the Ethereum virtual machine, Solana has the Solana virtual machine, Aptos and Sui have Move. So if you start building as a developer, and this is where we came from, we started building with the Move language. Your whole infrastructure, your architecture for your application is now vendor locked into this one blockchain. And we built out the first wallet and the first AMM. We're not those. It's a popular wallet and AMM. But now if we want to expand beyond Aptos to Solana to Ethereum, we have to hire a new team, that knows SVM or that knows the EVM. We now have to maintain these 3 code bases. So that starts to get very expensive and holds us back. We incur a lot of technical debt. Any changes or any bugs or any refactoring, you now have to do across, 3 different code bases. So it becomes prohibitive to actually have a multi-chain application. And I think a really good analogy to this, and blockchain in general is very similar, in my opinion, to public clouds, is that prior to Kubernetes and these container technologies, you were vendor locked in to a specific public cloud. You couldn't just, containerize your application and say, okay, I'm not happy with the service level agreements of IBM or Google or whatever. I can just take my whole application and put it over to AWS, or you can have backups. In crypto, it's a little bit different because what people mostly want is the assets, the coins that are there. So, for example, a very specific example is these perp dexes, let's say like Jupiter or Drift that are on Solana. They have a lot of users, and you could argue that they're competitive with GMX. But a user like myself, like I have ETH, I have Sol. If I want to go speculate on the price of Bitcoin, and I want to hold most of my collateral in ETH, I can't really use Drift. I'm forced to use, GMX or something on Ethereum. But I want to, I like the Drift mechanics, I'm invested in the Drift token or whatever, right? So like I want to continue supporting this thing, but I can't because I would need to have more Sol, or, I would only be able to have Sol as collateral, or, transfer it to USDC. But what if an application like that could easily expand to Ethereum? The business logic is the same. You go on the front end, and this is very common with EVM applications. Like you'll notice Uniswap, for example, is deployed across 22 chains. You just change the network and you can swap tokens. But for an application on Solana, application on Aptos, that's not the case because EVM has this monopoly. And we envision a future where you're no longer vendor locked in as a developer to offer your end users what they want, which is to use those assets, either ETH or Bitcoin or Sol, to be able to easily deploy, right? So I think this is a pattern we'll start seeing where the revenue is generated by the applications. The infrastructure itself is there to support the applications, and you'll start to get the Salesforces, the Robinhoods start to come out and we're starting to see that now. Polymarket, Pump Fund, all these applications are generating even more revenue than the L1s and the L2s. And then, they're going to want to expand, right? So maybe Pump Fund wants to do meme coins on ETH so people can speculate on meme coins with ETH. But again, if they wanted to do that today, they would have to migrate all their code to EVM. Let's say they want to do it on more chains, so all their code to move, and now have to maintain these 3 code bases. So very simply, what we're enabling is L2s that have multiple virtual machines, EVM, Move, and SVM, so that an application that wants to deploy on Solana and they have EVM or Move, or they want to do it with SVM as well, they can just easily port it over. Now you're secured by an L2, which it is secured by bridges, but it's fundamentally secured by the optimistic rollup or the validity proof, ZK proof, which is better than a third-party bridge that's mostly supported by multi-sigs or groups of multi-sigs. But yeah, essentially, very easily you can just deploy your application on any of these chains on the L2s that we're deploying. And yeah, the vision is to be able to take it anywhere. Right now we have proof of concept on Optimism, so that's Ethereum, and then on Solana. But yeah, this can expand to the emerging ecosystem of Bitcoin L2s, or I was going to say Tom, but I don't know. I think the Tom future is a little bit uncertain now.
Yes. So you brought up something that I was definitely going to ask about since you started going down this path. And that is like bridges and cross-chain and stuff like that. In the past, we've seen a lot of issues with there being potential attacks at that juncture. How do we prevent those types of things going forward?
Yeah, I think it's exactly the solutions that we're building now. So an application can be multi-chain, just like an application can be multi-cloud. And the reason you want that is because your end users want to use these assets. They have ETH or they have Sol. And I'll go through the example of myself as a user. I have a bunch of ETH, I have a bunch of Sol, and I could bridge my ETH to Solana, and potentially Drift uses wrap. I think they might use wrapped ETH as collateral, maybe not. But you could have wrapped ETH as collateral, and then I maintain my exposure to ETH. It's like it'd be the same thing as if the application was deployed on ETH. But now there's this third party risk of like, okay, now my assets are on Wormhole or they're on
Yes.
layer zero. Wormhole has already been hacked. All these, there's recently a thread on how layer zero is just essentially a bunch of groups of multi-sigs, and the team isn't really responding on that. But you're essentially then putting on the trust into these central points of failure. And I don't think the validators on Wormhole are malicious. I don't think the people behind the multi-sigs on layer zero are malicious, but this is not the spirit of crypto. Crypto is meant to be disintermediated, trustless. And L2s, even though they do have a bridge, so when you use ETH on Optimism or Arbitrum, you're depositing into a bridge contract. The assets are secured by the same mechanism that the whole L2 is secured. So if the fraud proofs or the validity proofs work, then your asset should be safe. And even in the case where the sequencer or the decentralized sequencer is compromised, there's a failsafe where you can force withdraw your transactions back to the L1. So L2s are fundamentally safer, quote unquote, bridging solutions than bridge between different L1s or different L2s that mostly rely on third party trust. So, I think this will still be around. I think there's still use cases for these third party bridges, and obviously they're very big companies, but me fundamentally as a user, I really don't trust, I wouldn't trust keeping my assets in a wrapped, bridged asset where it's like if it's a roll up like Optimism, Arbitrum, I do feel safe putting my ETH there.
Okay, and I appreciate you going through that. It makes a lot of sense to me. The other aspect of what you've spoken about recently makes me think a little bit more about um, while there are a ton of, let's say, layer ones, blockchains, um, don't you think that's going to sift out at some point in time? We're going to have far fewer that are actually going to be still used, or do you think that that's going to continue to grow? I see Solana, yes, Ethereum, of course, the layer twos that are built in either direction on both of them, a few others like Aptos or whatever. But like, how many more do you see? I mean, do you see a bunch propagating, the new ones that are going to continue to grow, or they're just going to build on those foundational ones that we're seeing having sort of been around since whatever, 17 or 21, whatever you want to say?
Yeah, I think it'll play out in a power law distribution where you have the biggest one having most of the market share, and then the second biggest one plus the tail being half of the biggest one. So it's very similar to the cloud. I'll keep bringing this up, the cloud market where you have AWS having most of the market share, and then you have players like Azure, being second, but and then obviously Google, IBM, a whole host of others. So I think it'll similarly play out, and maybe there's like niche ones. So, for example, we have the story one specifically for intellectual property. Although, again, I think most of what you can do on a neo L1, you could probably do on a custom L2. And I think an L2, fundamentally, there would be maybe infinite number of them because an L2, if built correctly, if fully trustless, if it's a stage two, layer two, then it inherits almost this exact same security of the L1. And the reason you want to be on an L1, not just the asset, and this is correlated, but it's the security,
Security, yeah.
the censorship resistance of it. So like going back to the point I made earlier of like, if I'm Trump or Harris or whoever, and I'm making the decision on like where our stock market's going to be, like, are we going to put it on, some new layer one that could go down, or could like literally like ton based on, some state level actor just take it down. Or am I going to put it on Bitcoin or Ethereum, which has already sustained state level actor attacks, right? Like Bitcoin, how many times has Bitcoin been banned in China, and it
Right.
only gets stronger? Um, so yeah, I mean, I think what's important at the end of the day is the security and censorship resistance of the base layer of the internet, let's say, um, because you don't want any one party, including state level actors, to be able to attack it. And I think right now only Bitcoin and Ethereum have that. And if you build L2s on top of Bitcoin and Ethereum and they're built correctly and the end state of them is to be fully trustless, then you can have, all the customizations that you want on these ulterior L1s can go on top of L2s. And yes, there's some like trust, you can incur some trust assumptions, there's going to be some trade-offs, but fundamentally you're inheriting most of the economic security and the censorship resistance of the L1, and that's what's important. And I think that will probably play out on Bitcoin, Ethereum, and Solana as like the top three where people trust. And I think the rest we'll see. We'll kind of see what happens. But Yeah, like fundamentally, being in the space and having seen it up close, I don't think most of the stuff is actually as safe as it's protruded, and it has a lot of points of failures. And state, and I keep bringing the state level actors are like a true risk. And we saw that with Ton, right? Like, what would happen if, for example, the new administration, and I'm not saying this is going to happen, but like they could, if the administration said, okay, crypto's illegal, or like you have to, register all these things, and until you do so, no public cloud provider, it's illegal for Google Cloud and AWS to host nodes for Solana or for Aptos or whatever. Literally immediately, one third of nodes go down, liveness is affected. And that is an issue that could literally happen just overnight based on, some arbitrary person making that decision at a huge state level actor. And you wouldn't be able to do that with Bitcoin or Ethereum. So, like we need to build these systems to withstand the test of time. Like Bitcoin should be as resilient as literal gold, and gold has been around for thousands of years. And I think Bitcoin has the potential to do that as well.
No, I agree. So one of the things that we'll sort of circle back to here is dApps. So I've been around for too long, and I've been talking about dApps for way too long. And I personally haven't seen them take off as much as I would have hoped at this stage. One of the first things I used to use as a sort of an example when I do talks was Peepeth, which was the X or the Twitter of the decentralized world built on Ethereum. The idea was that you could actually have this place where you could exchange ideas. And for better for worse, people could put anything they want up, and it was immutable. It was there for forever. But you also wouldn't have groups saying, this is something right, this is wrong, and taking it down, so to speak. Again, there's positives and there's negatives to both of those. But are you seeing yourself a lot of movement towards dApps and people actually utilizing them from your vantage point?
Yeah, I think the most important and the hardest part is product market fit. And for something to reach global adoption, you're talking about billions of people being able to use something. And today, even if you were to put billions of people, the same number of people that use Facebook or Twitter on an L2 like base, like it would be cost prohibitive. It'd be very slow, and people would be like, "This sucks." I'm going to go
Right.
back to the centralized version. Um, what I think is happening though, and I think it's important to see, and we'll probably see it in our, in the very immediate future, is people are waking up to the dangers of, it's like we've been in the matrix for so long about our data privacy, how, our information on the internet can be used or misused, how it can be sold for it doesn't even have to be nefarious reasons. Like, maybe you don't want to be sold a specific ad on uh, whatever embarrassing thing you've been searching, right? And that's the same for food. Like for a long period of time, we've been sold these like ultra processed food, and we're just like taking it, and now we have all these health issues. And that's the same thing for data, right? Like now people are waking up like, oh, privacy is important. So now Apple has pivoted to, having Safari be ultra private and similar with Chrome. And that's important for crypto because it's literally your money. Like your data is your money. And if like fundamentally, and I think we're getting to a future where it's going to be kind of scary, where if money continues in this path of being digitized and the control is in these central, authority figures, a government, then it can very easily be corrupted. So, like again, I'm not saying that the U.S. government has negative intentions, but we saw this in Canada, right? They can block your bank accounts if they don't like, your political positions, or they can block you from taking a flight or cancel all your credit cards if they feel like it. And there's literally not going to be any cash for you to have as an alternative. So I think the independence of money as data is very important. And people are waking up to the importance of that. And if you're giving people an alternative to say, okay, these two are exactly the same in user experience, it's just as fast, just as cheap, but this one you get to wholly own it and no one can mess with it, no adversarial party, your government can mess with it. People are gonna be like, yeah, I'll do that one. Like I'll take, like if everything else was equal and you had the choice between GMO food and non-GMO food, organic food, like people would take the non-GMO organic food. It's like, yeah, I don't want to, be fed this thing that I didn't know was bad, but now I'm waking up to know that it is bad.
Yeah, great
So
point.
yeah, and I think that over time is happening slowly. and it'll probably be like a pivot, like a tipping point, right? Like all of a sudden people will be like, okay, yeah, like if this alternative to Twitter, Friend.tech, the Arena, whatever, takes off and it's like exactly the same thing as X, but now um Elon can't just block me. Like for whatever reason, the algorithm says that, I'm posting stuff and now my account is banned. And now what can I do? I can't get a check mark or whatever. Like, but like everything else being the same, have the same followers. Like, why not just use the one that's on a blockchain if everything else is equal? And I think that'll happen, first with financial applications, because that's kind of like the closest. So, for trading assets, maybe currencies, we'll digitize more currencies so you can, trade the US dollar and the euro. Maybe it'll move on to stocks or synthetic derivatives of stocks, et cetera. So I think first it'll happen with financial applications because it's almost like a easier transition. But yeah, I wouldn't be surprised if it also eventually happens with social, with I don't know, like food delivery apps. It can literally be anything. And I think part of it is that the infrastructure today isn't there yet to support these mass scale apps, but within the next 5 to 10 years, I think we'll get there. And over time, people will realize like, yeah, this is, all else being equal, this is the organic food version of, social media or Uber or whatever. So why not use it?
Yeah, that's a great point. So that's what I was trying to figure out is like the timeline. I'm actually surprised that we haven't gotten there yet, but if the infrastructure is not there, then that makes even more sense. When it comes to the data and privacy and things of that nature, I always lean on zero knowledge proofs or zero knowledge. Hopefully that will be a partial solution for some of those things too. But I guess again, we'll see on that part.
Yeah,
Um,
a good, oh, sorry to interrupt, but a good example is e-commerce, right? Like e-commerce was part of the internet bubble in the 1990s, and like you could argue, like someone could have made the point in 1990 after the bust of the internet bubble that like, hey, all this internet stuff, the e-commerce is like, vaporware. Like no one's gonna do this. Right? Like why would I buy my food online where I could just go to the grocery store and pick it out?
right.
Why would I get everything delivered when I can go look at it at the mall? But like Amazon literally today is one of the biggest companies in the world, and they started in that timeline, and it did take them 10, 20, 30 years to get here. And I think similarly, we're just a little bit impatient, but I think we'll get there. And the rate of like technological innovation is accelerating. And with AI, I think possibly also in the next 5, 10 years, we'll get this convergence where all of a sudden we'll wake up and, everything will be on a blockchain. We'll be living amongst, digital intelligences, probably like way smarter than us that communicate with each other over the internet with Bitcoin and whatever cryptocurrencies are around. And we'll be like, oh crap, like, all that stuff that people predicted, like, in 2020 that I thought was ridiculous is now like true.
Yeah, and I'm right there with you. I think AGI is probably within the next few years, but we'll see if that happens or not.
I think the
All right.
tipping point is there. I think we're past the tipping point for that one.
Yes. No. All right. One last question because I know we're short on time, but I want to see get your idea on this because it's something that's come up more and more in the last month or so. And I alluded to it in the beginning, and that's the idea that there may be potentially in the future some issues with Bitcoin. Justin Bonds, the founder and chief investment officer at Cyber Capital, if I remember correctly, said that Bitcoin's security model requires the price of Bitcoin to double every 4 years or so, or for transaction fees to become ridiculously high to maintain the current level of security. Do you have any thoughts on this as something that potentially could be a problem for that blockchain?
Yeah, definitely. The finite supply of Bitcoin means that in about 100 years, there's not going to be any more Bitcoin to be emitted to miners. And that's exactly what it means. It means that in order for you to sustain the economic security of the miners still wanting to mine, you need the transactions to be really, really high. Um, I read this book, I think it's called the Bitcoin Standard. Uh, and it posits, I don't know if it was this book, but I read this somewhere that it posits that at some point, if Bitcoin does become the standard, gold and store of value and unit of account and essentially like standard for money that everybody can trust, similar to gold, then you'll have a market for settlement of the L1 and all these technologies that we talked about, L2s, L3s, Lightning, et cetera, can carry on most of the burden of the day-to-day transactions. Yet you might have like very large entities, potentially like, a consortium of banks literally settling all the transactions that they did that one day. And it might cost them, I don't know, hundreds of millions of dollars for one transaction. But then, that's the bulk of those are batch process, billions of transactions that people were doing on Lightning, layer twos, layer threes, et cetera. And that's like, the US government's batch transaction that they put through to the L1, and that costs, $1 billion. And then China does their batch transaction, that costs $1 billion. So Bitcoin is like this system, this perpetual machine that literally it's incredible. It's almost like a dumb AI, and not dumb in a way, but like just a simple AI that just its sole purpose is just to acquire more and more resources. And I literally think Bitcoin is a catalyst for something like a Dyson sphere, for example, where you literally, if the end goal of Bitcoin is just to have more economic security, to maintain money and be a store of value and a unit of account, and literally the native internet money, then you might have something like an AGI or some AI say, okay, I need to build literally solar powered miners, and then put that across the sun so I can beam back Bitcoin to continue paying my data center bills, to pay the NVIDIA bots, to build bigger, stronger data centers to make my brain bigger or whatever. But yeah, I mean, I think like it's just the machine, and like the perpetual motion of it so far has carried it this far. And even through like very, very sharp price movements down, we've seen it been resilient. And it could be the case that people don't want to pay hundreds of millions or billions of dollars for transaction fees in 100 years. But if it does reach that tipping point, then I think we're going to have to, and it'll just evolve to be that. Another, a counter argument could be that Bitcoin itself is more so a social technology. So if you did want to get rid of, and I think this would be like a very, very contentious thing, but if you did want to fork Bitcoin and put in, 2% inflation or whatever, then like maybe that's something that could happen. And then you
Huh.
have like Bitcoin Classic and, Bitcoin.
Cash and that.
Yeah,
Yes. There's so many
yeah,
of them.
exactly. Yeah. But yeah, I don't know. That's 100 years away. I have faith that the idea of Bitcoin as like a perpetual motion machine that can't be stopped at this point, almost like a snowball that will just continue acquiring energy and resources to be the secure form of money for the internet, is like already in motion. I don't think it can be stopped. But yeah, I mean, it's fair points that it could potentially be a bug that it's finite supply.
Fascinating. Wonderful. Well, Alejo, thank you so much for your time today. I really appreciate it. It's been excellent.
Awesome. Yeah, I really enjoyed this conversation.